we're going to begin the first panel. So we're organizing today a little bit differently than yesterday. We're going to have a few panels which are more conversational in style between two different groups of stakeholders. We're going to start with stakeholders which are really the international multilateral organizations who are facing the challenge and opportunity of fintech, and then two of the foundations who are deep into the space. One of the foundations dropped out, so we've got wasn't drop out, had something better. So we've got Arturo Franco, who's Senior Vice President from the MasterCard Center for Inclusive Growth. We've got Ken Weber from Ripple Impact. And then we have Eric Perotto, who's the Chief Economist of the Inter-American Development Bank. And on the screen, a very well-dressed Bill Maloney, who's the Chief Economist for Latin America and Caribbean at the World Bank. So welcome, gentlemen. And Seth Garth from the Bill and Melinda Foundation Society was the guy with the better offer. I was his thesis advisor, former PhD student of mine, so he's got to come apologize. I mean, he chose someone else rather than me. Okay. So we're going to begin. I'd like the four of you just to briefly introduce yourself, your role, and touch a bit on the importance of fintech for the underserved population in your organizations. And let's start with Bill, who we ought to keep him awake. He's in Washington.
Actually, I'm in the Athens of Latin America, which is what some people call Bogota. I'm extremely glad to be here. The interaction of those of us perhaps closer to the front line and the best of academia is absolutely critical for what we do and our agenda. So I find this kind of conference supremely important for advancing this agenda, particularly this agenda in the region right now. We are, obviously, we see the potential for this combination of new technologies that reduce transaction costs and information asymmetries, and at the same time allow us to use the kind of information that comes from that to better serve our populations, to have tremendous possibilities. So far, we haven't exploited that as much as other regions do. Africa has twice the population and 10 times the mobile accounts that Latin America has. So there's a huge agenda, and I guess we're going to talk more about what those agendas are as we go along, but that's basically where we in the Chief Economist's Office from Latin America, talking about the region in general, locate ourselves in this issue.
Well, thanks, Bill. Let's continue in a Latin American theme and ask Eric Perotto to say the same.
First of all, thank you very much for the invitation. I've seen Paul like 100 times through Zoom, so this is the first time that we meet in person, so I'm lucky to be there and to be here finally. The financial inclusion issue, I think, is becoming a personal and institutional obsession. So in my previous life, I used to be the chairman of the Banking Regulatory Agency in Chile. So that's why we push this agenda forward through many reforms, many laws, many regulations. And now at the Inter-American Development Bank, we're trying to put together also initiatives, both on the operational side, but most importantly, at least on my side, on research about financial inclusion. And that's why we partner with Paul, with Sean Higgins also, which is there, okay? And we are trying to offer some knowledge and some new insights to promote financial inclusion, because I think the COVID-19 pandemic is a wake-up call to say, okay, we need to move from a slogan of inclusive growth to actual actions. So that's why we are really involved in this agenda. So thank you very much for.
Great, Eric. Great. Glad you're here. And my brother said you were were quite articulate as well. My brother was his professor at NYU, so.
My thesis advisor. So.
Yeah. Let's go to Arturo Franco from MasterCard Inclusive Growth.
Yes, hi, Paul, great to see you. We've also been having too many Zoom conversations, and I wish I could have made it there to say hi in person to Erika and the rest of the panel. I'm in Brussels today, and my internet is no correlation between development and digital readiness. So for MasterCard, around mobile banking, around investment apps, digital credit, open banking, and obviously blockchain are really exciting. They are leading to new capabilities for the company. And I think in general, we see them for their potential as enablers and accelerators of financial inclusion, as Eric was mentioning. I think these new technologies can definitely play a critical role in unleashing economic potential of people, of small businesses.
Okay. Well, directly from Brussels, Honduras. Okay.
Of driving. So these technologies can unleash potential. They can drive equitable and sustainable economic growth. But the technology alone is not and will never be a silver bullet in addressing what are more complex social, economic, historical, in some cases, forces that have contributed to the exclusion in the first place. So at the Center for Inclusive Growth, which is the social impact hub of MasterCard, we invest in research, we invest in programs to try to basically deliver on this promise of financial technology for inclusion. MasterCard has a commitment to bring 1 billion people into the digital economy by 2025. We reached 500 million financially included in 2020, and we decided to double down on that goal. And so my organization, the Center for Inclusive Growth, combines the assets of the company with philanthropy, with data science, to try to advance a digital financial agenda that is inclusive.
Okay, and the much talked about Ken Weber.
Thank you, Paul. Thank you, fellow panelists. I work for a company called Ripple, which is a fintech that exists to improve global financial systems, in particular the way that money and other forms of value move around the world cross-border. It's part of the founding mission of the company to introduce technologies and services that make financial services more accessible and affordable. And I think our companies and our sector's early success with driving down the costs of remittances, for example, and other cross-border payments by SMEs, not just in global North countries, but in global South companies, have shown us that there's real promise in this technology. We are one small fintech, less than 10 years old. We recognize that there are probably limitations to how much we can move the needle alone, and so you're very much inspired by the work of the Center for Inclusive Growth at MasterCard and the seriousness there, the heft there. The combination of company resources, talent, technology, and financing. But we also are eager to be led by NGO partners, multilateral partners, to work with other fintechs. Our support for UC Berkeley is part of a global university partnerships program, and our support for LIFT. Our intention there is to have a big tent approach with many funders and research partners. And so we're excited to see this work moving forward. We recognize that blockchain and crypto themselves are not always the most useful intervention. And so we're treading carefully. We want to try to see which applications of the technology hold the most promise, and then let's experiment with and try to scale those. Let's be clear about what's not useful. So let's not be evangelists for these technologies if they're not appropriate. And so we see LIFT and the work of Berkeley and the partners here as seminal to building the field to ensure that we can deliver at least on some of the promise of these technologies going forward.
Great, thanks to the four of you for clear introductions and being brief. So let me start with a couple questions to the multilaterals, and then we'll shift back to the foundation. Eric Parado, could you tell us what you see as the two biggest issues in Latin America for which financial technology might be a solution?
Okay, let me tell you about my experience as a chairman of the regulatory agency in Chile, because I think innovators and regulators are running different type of races. The innovator runs the explosive 100 meters, and the regulator runs the boring marathon. And the problem is that if you put the innovator and the regulator together, it's impossible to have a race. And I think that's one of the most important challenges that we have to face in terms of trying to find a middle ground. In my time, if you want to put, for instance, a sandbox, you have to pass a law. So I didn't have the power to prepare that law. So I have like a box full of stones, not of sand. So it was very uncomfortable to sit on. But at least we try to talk to innovators and try to talk with fintechs, but it's very difficult if you don't have a flexible regulation to change that, because incumbent banks are very strong. At the beginning, when I started that position, I believed in self-regulation. At the end, I don't believe on that. So that's why you have to change some rules, change some regulations. Regulators shouldn't be an impediment for fintech. And there are so many good things about fintechs, for instance, on the payment side, that we need to push forward. And that's why we're trying to change a couple of laws, we change a couple of regulations, and we are trying to open it up the market for other fintechs. And sometimes banks have to see fintechs not as a competition, but as a possible partners. And I think now they are understanding that, because either they play with those new rules or they are going to be an old institution that nobody cares. So I think that's one important point. Second, I think we have to promote innovation through education in our educational system. In Latin America, we spend a lot of time trying to remember all the rules, all the numbers, all the dates, but we are really bad to innovate. So there are only a few companies that can change in some way the well-being of people and citizens in Latin America. So I think both components are really important challenges in Latin America nowadays.
Great, thanks, Eric. And Bill Maloney, same question to you. You want me to repeat it?
Yeah, sure.
Okay. So what do you see are the two big issues in Latin America where fintech is potential solutions, and what are the impediments to them being used?
Right. So, huge question. I want to just start saying that one thing that characterizes Latin America at this point is it's a pretty low trust environment, and there's people will fondly say that there's a falta de confianza. There's a lack of trust among each other, with the government. And I'm really interested in general about the role of new technologies in addressing a whole range of issues, finance and otherwise, that might improve extension of services and the like, including finance in low trust environments, but also that might feed back and create higher levels of trust. It's hard to look at a country like Chile right now, which has done so well and yet see such dissatisfaction with weak governance, low inclusion, little mobility. So in general, this whole technological agenda is important. I will focus particularly on the growth issue right now. We are facing something like 2.5% growth going forward over the next 3 years, and that's low and pathetic. And it's particularly discomforting because that's how we were growing before COVID. So we have a major productivity problem. Even again, the best performing countries like Chile have no productivity growth, and just a general growth problem that obviously has an inclusive dimension as well. But just in terms of the growth itself, I think there are a couple of ways that are important to us advancing that agenda. The first thing, and this has to do with your paper, Paul, is how we collect and disseminate data. It sounds boring, but we have lots of problems with the quality of data here, and things like product price data are very hard to collect, but necessary to get it. Concepts like total factor productivity, TFPQ. In some places like the Caribbean, putting surveys in the field is incredibly costly. I'm not sure the scale economy is there, but for some reason it doesn't happen. And we have this Latin American data paradox, which is actually that we produce some of the best data in the world, but nobody can use it because of worries about confidentiality. So the bringing of new technologies of all kinds that would engender mass confidence on the part of the statistical authorities to allow far-flung users more access would help us understand much better why we're underperforming. I'd say among larger firms, productivity is some combination of new firm entry, within firm upgrading, reallocation of factors of production, and all of these involve access to finance, which is currently limited. And to get back to some of what Eric was saying, it's actually probably dominated by a pretty conservative and traditional financial sector, which has been successful in limiting somewhat the growth of financial intermediaries, of new tech financial intermediaries in the region. Among larger firms like SMEs, there's some combination of weak managerial capabilities, but also access to finance, which is impeding the adoption of technologies, and in fact, how they rise to competing with, for instance, Asian imports and the like. There needs to be some shaking up of the very conservative financial sectors. And this insurgent technology, I think, is important in a big way towards doing that. Just in general, I think our banks are also not really well equipped for evaluating risk. I don't know if these new technologies can make progress on that, but to the degree that there's more competition, that's probably good. Micro firms, they're like 80% of the firms in our economies. In Colombia, 9 out of 10 of those don't even have a tablet, and 70% aren't plugged into the internet at all. I don't know how much these have a potential for growth. I think most of them are Lucas-style mom and pop firms with a very high theta, low managerial quality, and have little aspirations for growth. They report having little aspirations for growth and little demand for finance. I'm not sure how much we can take that at face value, in the sense that if I know I can't get credit, then long ago I decided I wouldn't try it. And I think David McKenzie has found, no, that's not always true. So I don't expect that these guys are going to be driving growth. That's going to be the bigger firms that I was just talking about. But if we can increase productivity because of the increased access to capital by even 50% over, that's makes a big deal in impact on poverty and aggregate productivity to some degree. These issues, just to end up, I know I'm absorbing all the oxygen, but we have big issues of migration. Somebody mentioned remittances in Guatemala, something like 50% of GDP is remittances. So how those remittances are transmitted from mostly the United States and how they feed into the financial sector to ensure a better allocation of credit and the like is kind of key. I'll stop there. I have other things we can talk about, but presumably there's more time.
Thanks, Bill. What's interesting to me is both of you keyed in immediately upon the political economy of the rollout and diffusion of these technologies, that regulators really slow things down because they view their job as the protectors of people. And so they're worried mostly about harm, not benefit, cost, not benefit. And both Bill and Eric noted that these firms and technologies, these startups, are a competitive threat to existing players who are stuck in legacy systems, not using data very effectively. So they're going to use regulatory and legislative mechanisms to prevent the fintech technologies from rolling out. Eric focused on the need to bring the next generation up to speed in terms of how to use these technologies and the advantages of them through education. And Bill talked about the potential to improve for productivity, not in the small and medium enterprise space. So super interesting. Let me turn to the foundations and Kev Weber, how does Ripple Impact decide what to invest in? And are you hampered at all by just the lack of information about the potential impact of these investments?
It's a great question. We are less direct investors. We're more likely to, to provide money to NGOs, for example. We work with all of Mercy Corps on financial inclusion and resilience, of course, but most of our funding and collaboration is focused on Mercy Corps Ventures, which has a technology forward, market-oriented approach to making investments in early stage fintechs and other startups in emerging economies and frontier economies that are, that share goals around social benefits and financial inclusion. So, we're funding the funders. From a business standpoint, we are a B2B. We are helping the helpers, whether it is working, we of course work with incumbent financial institutions on a number of use cases that are powered by blockchain, somewhat less so cryptocurrency. We are also very active with challenger banks or app banks. Somebody a couple of years ago said, stop saying you want to bank the underbanked. They don't necessarily want, a formal, a traditional set of relationships with formal financial institutions. The phone, the telco, the app bank, the neobank, those are all viable options in many contexts. So we're working with those companies to help them improve their product market fit and to help them scale, their businesses and their impact. And we're very much in line with the Gates Foundation. The Gates Foundation's longstanding strategy around digital financial services and financial inclusion. It needs to be impactful, but it also needs to be profitable so that, there can be market innovation and adoption and scale. There is also for Ripple a regulatory and government context. We've been frustrated in the United States around regulatory clarity, and we have our own set of particular challenges with the SEC, which will resolve hopefully over the next few months. But we do work closely with central banks on central bank digital currencies, and there's a range of motivations for those banks and countries embracing this technology. Sometimes it's FOMO and it's defensive. Other times it's a sandbox that is pointed, at least in part, at using these technologies for financial inclusion. So sometimes our fintech sector can't get out of its own way in terms of reducing the FUD, the fear, uncertainty, and doubt amongst policymakers. Certainly, there are issues with volatility and fraud and carbon if it's a proof of work system. But we think that collectively we're making progress in terms of working with not only incumbent financial institutions, but incumbent policymakers and legislators around understanding and clarity of policy and how these technologies can be deployed to meet what they see as their objectives around ensuring that financial systems are inclusive and equitable. So we're very, very much invested in that, and not just by funding lobbyists on K Street, but we're actively involved in the regulatory context and trying to, not just in the United States, but around the world, introduce more clarity around some of these ideas.
Great, thanks, Ken. And Arturo Franco, how does MasterCard Inclusive Growth decide on its investments and the fact that there's such limited knowledge in this space about the effectiveness of these technologies?
Yeah, Paul, I'm going to use Eric's sport analogy. I think so. MasterCard would be like an Olympic team. We have a part of MasterCard that are 100-meter, maybe even sometimes 50-meter runners, which is our Start Path program, the connection to fintechs. Seen many fintechs from Latin America and other regions in the world go through that program where they are exposed to concepts around inclusion and sustainability and inclusive growth. And it's very exciting to see the emergence of these companies. There are teams at MasterCard, to Ken's point, that focus on regulation, on public policy, that are, I think, thinking in the same way to build on the idea around trust. Trust has obviously a very big connection to consumer protection, to knowledge, to education. And so we feel that as the financial system, to take a region like Latin America, kind of continues to evolve and has this dynamism and new technologies, we always need to have basic kind of safety measures and regulations that make people actually trust the system. I come from Mexico, which is a country that has a ridiculously low level of financial inclusion, probably amongst the lowest in Latin America, and it's been stagnating for years. We're going to see from Leora Clapper at the end of this month where Mexico lands on the 2021 Findex, but my sense is that it will be close to the 40% of people that claim to have a bank account. And we have done, to your point, Paul, research, very deep research with Berkeley, with Stanford, with Tec de Monterrey, where we created a financial inclusion research center last year that will cover Latin America, basically asking the question, why are people not adopting financial services? We know that they have phones. We know that they have smartphones. We know that they have internet. And still 90% of transactions are done in cash. And Leora Clapper found last year that there was a massive expansion of access to digital financial services through the pandemic, but that many of those who received a new financial service are ready in Mexico to go back to the cash economy. So they will use it once or twice and go back to cash. And so we know that what's competing there is a whole set of informal kind of financial systems that give people more, I guess, comfort because they can hide the money behind their pillow, but obviously not show up in productivity measures or support the multiplier effect that finance can have in the economy. So the center, just to finish the analogy of the sports, is a marathon runner, I think, at MasterCard. We look at the very long term. We ask very deep questions. We partner with NGOs, with academics, with multilaterals. We've been doing some work with Eric as well, to try to tackle these deeper structural problems around finance.
Great, thanks, Arturo. And before we open it up to the audience, let me ask one final question to all four of you. We're here sitting at a university, our currency is research. What's the biggest problem and the most pressing problem that you think we should be working on next? And let me start with Eric Parado.
My currency also is research. So we are a very unique department within the Inter-American Development Bank because we think, we provide assessments, and we provide policy recommendations, and we are not involved in operations, but we try to influence our operations and the policy making in Latin America and the Caribbean. And if I have to choose one challenge, I think is trying to close the gender gap. I think for us it's very important because it's not only fair, but also it's about business for the society and for the financial system. And let me give you an example of this. We recently wrote a paper about that, asking whether there is discrimination in credit markets in Chile. We hire actors and actresses with the same characteristics, socioeconomic characteristics, education, salaries, and so on. So the only difference was the gender. And we take a look previously to the data, to the raw data, and all the time women were better payers than men in consumer, commercial, and mortgages. All the time, every year. But despite that, interest rates were much higher for women than for men. So we said, okay, probably there's some sort of discrimination. So we hired these guys, the actors and actresses, and they applied to loans. And we saw that discrimination wasn't coming from the interest rate side, but from access. So the difference was 18% in access against women. If you extrapolate this in money, it's around $12 billion only for Chile. So we're saying to the banks, you're discriminating, but this is bad itself, but you're losing a huge business because you're giving the same loan to a man with the same risk characteristics. And that's why we're trying to say, you know what, this is really important because we need to find sources of growth. We need to find sources of recovery, and the recovery should have a face of a woman. So I think that's one of the most important challenges that we have in our hands.
Thanks, Eric. Ken Weber, what advice would you give a young PhD student interested in this area?
Gosh, I mean, it's hard to pick just one.
Two.
No, I'll stick with one.
Okay.
And that you might expect somebody associated with a foundation at a company to say this, but it really is about diversifying the fintech workforce, not just in places like the United States, but it's also, diversifying that workforce through investment, through deployment of capital to fintechs that are in these economies, so that these technologies can be harnessed, and so that we're not only seeing studies here on the after effects of deployment of these technologies, but we can test up front, and in the design and deployment of the technology in the first place, we can build in some good biases, right? Mm-hmm. based on the data and based on what we know. And so again, one 600-person fintech is not going to diversify the global fintech workforce, but through 50 or so university partnerships, including with a number of HBCUs here in the United States, other fintechs are also following suit now and coming to universities with funding. And so, we hope that will help inspire an army of new fintech workers to come in, join existing companies, start new companies. Some of the most exciting business models that we've come into contact with are not in the United States, and they're in some of these markets. So to me, that's the challenge. And that's probably a 10 or 15 year time horizon in terms of really seeing that change. But we're very interested in that.
That's great. And this afternoon, not in reaction, but apropos of comments about diversity and the gender gap, we're going to hear about some work going on in Mexico with RappiCard, where they're using their transaction data to try and build better credit scoring models and to identify women who don't get access to credit cards because of poor credit history or no credit history, and expanding credit to those populations. So we have someone in the tent, which hopefully will help start to address some of those issues. Let me turn to Bill Maloney. Bill, what's pressing on your plate where you'd like better answers to what to do?
Well, again, like Eric, I have a research group that is involved in a lot of different areas, but I don't want to narrow it down to one thing because I want this conversation to be dynamic. I want to keep bringing up questions with SIGA and LIFT over the near future. But what is, is the broad theme, I'd say anything around getting us off dead center in terms of growth and including as many people as we can in this, making them feel part of it. Finance is an important part of both of those things. And just, there are 1,000 thesis topics around that, but that's what keeps me up at night.
Great, thanks, Bill. And it seems like your earlier comment on the importance of trust in institutions, trust in these companies, in the financial system, is really key to really including a lot of people and the effectiveness of these interventions on productivity and growth. And then finally, let me ask Arturo Franco, you have a wide view of the finance space at the bottom of the pyramid. What do you think are the priorities for knowledge generation, if you had to pick one from your point of view?
So I'm going to cheat a little bit. I think that there are there are two categories of. I'm gonna choose two categories of questions, right? That from the social impact perspective at MasterCard, we are always trying to answer, and very simply put, is what works and how do we scale it, right? And you can apply those two questions to financial inclusion and the challenge we've been talking about for Latin America in particular. You can apply that to digital inclusion, digital skilling, to the challenge that Bill talked about on SMEs. For example, Berkeley just published a project that we funded on Jasaduka, our solution in Kenya to the issue of building credit for mom and pop shops that we did with Unilever and a bank, where they built a credit history based on their procurement from Unilever and got collateral in that way. So we know that works. So we move into the how to scale it. And so I would say there's 1,000 what work questions and 1,000 how to scale it questions. The overarching question is, how do we build a digital inclusive economy that truly works for everyone?
Great, thank Arturo. And what was really interesting about your response was not just demonstrating what works, but whether it's scalable and how to scale, because that's the movement from knowledge to action. So quite interesting. We have a few minutes. These guys kept on time, which I wouldn't expect from people in their positions, but they did. So thank you very much. Why don't we open it up for a few questions or comments?
Let me say something.
Oh, sure, please.
On trust, because I'm really glad that Bill mentioned the trust issue, because we recently released a flagship on trust for Latin America and the Caribbean, and the trust levels are really low. We don't trust each other. We don't trust the government. We don't trust the Congress. We don't trust the political parties, and we don't trust the companies. We don't trust the markets, and that's why many people are complaining about what is going on in their countries. And they believe that markets are taking advantage of them and not the other way around. And that's why I really like what Ken said regarding that the solution has to come up with all the partners involved. No, it's not a unique solution coming from the government or the private sector. I think we have to have this type of discussion. And I'm really glad that you, Paul, through LIFT, we get together and to talk about this, because we have to find good partnerships and good solutions.
Great, thank you. Comments, questions? Anything online? Okay.
Can I say something else?
Yeah, no, you got 4 minutes, go for it.
No, because LIFT, I think it's a really good example of what we need to do in terms of trying to find new forces, new institutions that push this agenda forward. And we're trying to do something similar at the Inter-American Development Bank with a knowledge initiative called FinLec. So, and our first step is going to be on payments. So payments is our focus. And our ambition is to have for all the citizens in Latin America, one means of payments. We need to democratize payments. We need to have good quality access in terms of how to pay, how to receive salaries, how to receive subsidies, and so on. So I think it's important also that you should know this type of knowledge initiative that we're trying to do at the IDB.
Well, that's very, thank you, Eric. That's very appropriate in the sense that one of the pillars of LIFT is to build not only partnerships with industry, but partnerships with policymakers and the aid agencies. And so with Mokhtar Diop at the IFC, who gave the keynote, we're engaging in a body of work with them, with the IDB, with Eric's group, with CGAP. The head of CGAP is going to be our keynote at lunch, the World Food Program, Mercy Corps, CARE, and a bunch of others. So our model is to build partnerships with researchers, policymakers, and industry, and the IDB is a key member of that. So thanks a lot. We have a question here.
Yeah, thank you so much for a great panel. Question I had was around, the last question was talking about what are the biggest issues that you're seeing and kind of the priorities for action. That there was a huge trend around, making sure that how these are developed is inclusive, whether it's in the workforce or the technologies themselves. And I was just curious if any of you can share perhaps examples or, especially with some of these newer technologies like these alternative credit scoring tools and whatnot, any examples around how some of these tools are being developed really inclusively with the people that are perhaps most impact or could most benefit from them, like, people in different villages, or especially from like a gender lens and perspective, what are ways that are perhaps creative or exciting, maybe using design thinking and whatnot, that are really engaging some of those who are most left out of these conversations and some of the design of these new technologies? Anything exciting that folks are seeing? Is that like a priority for any of you as funders and leaders as well? Just curious. Thank you.
Who wants to take that?
I mean, Arturo has probably a much broader portfolio than we do, but I can say that we're operating both at the most basic level, and so our work with CARE around village savings and loans groups. I mean, some of the funding there is going to digitizing those groups from notebook-based ledgers to something that is smartphone-based. So there's no blockchain or crypto involved at all there, and it's very much stakeholder-led at the community level. And I think if anything, we're seeing how not ready that context is for these new technologies. But we're also working upmarket, if you will, with some of the investees of Mercy Corps Ventures. And there's a tremendous amount of sophistication in some of those companies that they're funding, where they are using wallets, stable coins, crypto to cash programs, and where those pilots and those early stage companies are doing some really exciting work, and they're led by people who are from those countries and those communities.
Thanks. Let me give the last word to Arturo Franco, who raised his yellow Bart Simpson hand on Zoom.
Great. I think it's a really interesting question. Thank you for asking it. I would say from a process perspective, although we are a B2B company mostly, we try to connect to the users as much as we can. We use obviously all of the best and brightest methodologies to do so. We launched a few years ago a financial inclusion lab in Kenya with the Gates Foundation, where we actually test and develop many of our what Paul called bottom of the pyramid solutions, or our kind of financial inclusion products, and we do it there. We've just launched a sustainability, a green tech lab in the Nordics for use cases around carbon calculators and other things where we are working with some of the leading experts and financial sector companies that are working on climate resilience and climate adaptation. So wherever we can, we don't do everything from New York or purchase. We are in the field, whether it's a developed country or a developing country context, meeting with clients, meeting with I mentioned the Jathaduka project, meeting with mom and pop shops and trying to understand how they do finance, how they access these products and how to make them more useful to them. The last thing I wanted to add is I think going forward, it's going to be very important for multilaterals, regulators, and national governments to have basically a constant dialogue, just like Lyft is doing. So I wanted to commend you because we're seeing some of these technologies move so fast from kind of ideation to the marketplace that regulators are really on their back foot, and they are digital, which means that they can grow so quickly that they can create a big damage even before we notice them right in the market. And so I would just push for a more kind of constant and shorter cycle from research to action. Paul, as you were saying, I think it's also on researchers to become perhaps a little bit more flexible so that they can get these insights quicker to the regulators as they are happening in real time.
Well, thanks, Arturo, and recognizing the difference in geologic time between universities and policy. So let me thank everybody for joining us, Ken and Eric, who are here in person. And I want to mention to Bill and Arturo that we had a phenomenal dinner at a 3-star restaurant last night with great wine, just in case you can make it next time in person. But thank you for beaming in from taking a break from your champagne and mussels in Brussels and whatever the equivalent is in Bogota, which I don't quite know. But okay. But again, I really appreciate Friends of Berkeley stopping by for a quick chat. Thanks a lot.